If you've been wondering whether UNH is a good investment right now, you're in the right place. We're going to cover what UnitedHealth does, its recent performance, financials, risks, and whether it's a buy, hold, or sell in 2025. Let's get started. First things first. What exactly is UnitedHealth Group? In simple terms, UnitedHealth is one of the biggest healthcare companies in the world, and it's a powerhouse in the U.S. market. It's not just an insurance company, it's a massive healthcare conglomerate that touches almost every part of the healthcare system. UnitedHealth operates through two main divisions, UnitedHealthcare and Optum. UnitedHealthcare is the insurance side, providing health insurance plans to individuals, employers, and government programs like Medicare and Medicaid. If you or your family have health insurance, there's a good chance you've heard of them. They cover millions of Americans. Then there's Optum, which is the services and technology arm. Optum does everything from running pharmacies to providing data analytics for hospitals and doctors. It's like the tech and operational backbone of the healthcare industry. Optum has three segments. Optum Health focuses on direct patient care and wellness programs. Optum Insight provides data analytics and tech solutions for healthcare providers. Optum Rx manages pharmacy benefits, helping people get their prescriptions. Why does this matter? Well, UnitedHealth's business model is diversified, which means they don't rely on just one thing to make money. They're involved in insurance, healthcare delivery, and technology, which makes them a unique player in the market. Their size and reach also give them a competitive edge. Think of them as the Amazon of healthcare. Now that we know what UNH does, let's talk about how its stock has been performing and why it's been in the headlines lately. 2025 has been a wild ride for UNH stock, to say the least. As of July 9, 2025, UNH's stock price is around $302.91 per share, with a market capitalization of about $275.5 billion. That's huge. It's one of the largest companies in the healthcare sector. But here's the kicker, UNH has taken a beating this year. Its stock price is down about 46% from its 2025 peak of $620 in April and a whopping 52% from its all-time high of $630.73 in November 2024. So what's going on? A few things have hit UNH hard. Q1 2025 earnings miss. In April, UnitedHealth reported earnings of $7.20 per share, slightly below Wall Street's estimate of $7.29. Revenue was $109.58 billion, which was solid, but the earnings misspooked investors. CEO departure. In May, the company announced that CEO Andrew Whitty was stepping down for personal reasons. Anytime a major company loses its CEO, it creates uncertainty, and the stock dropped 18% in a single day after the news. Rising medical costs. UnitedHealth also flagged higher than expected medical costs, which could squeeze profits in the short term. They even suspended their 2025 financial guidance, which made investors nervous. To figure out if UNH is a good investment, we need to look at its financial health. Let's break it down in simple terms. Here's a snapshot of UnitedHealth's financials based on the latest data. Revenue. In Q1 2025, UnitedHealth brought in $109.58 billion in revenue, up from previous quarters. Analysts expect $111.66 billion for Q2 2025, showing steady growth. Earnings per share. Last quarter's EPS was $7.20, a slight miss, but still strong. For Q2, analysts predict $4.83 per share, though estimates range from $3.92 to $5.79. Free cash flow. UnitedHealth generates about $5 billion in free cash flow per quarter. That's money left over after expenses, which they can use for dividends, stock buybacks, or reinvesting in the business. Price-to-earnings ratio. UNH's forward P/E is around 11, which is low compared to the S&P 500 average of about 15 to 20. This suggests the stock might be undervalued. Price-to-sales ratio at 0.9. UNH's P/S ratio is also lower than the broader market, which hovers around 2.5. Dividend yield. UNH pays a quarterly dividend of $2.21, giving an annual yield of about 2.91%. That's decent for a healthcare stock and shows they're committed to returning value to shareholders. Now, let's zoom out and look at the bigger picture. How does UNH fit into the U.S. healthcare industry and what trends are shaping its future? The U.S. healthcare sector is massive, worth over $4 trillion annually, and it's growing as the population ages and demand for medical services rises. UnitedHealth is the largest health insurer by market cap even after its recent stock price drop. Its diversified business model, combining insurance with technology and services through Optum, gives it a unique edge. Here are some key trends affecting UNH. Aging population. By 2030, about 20% of the U.S. population will be over 65, driving demand for Medicare and related services. UnitedHealthcare's Medicare Advantage plans are a big growth area. Technology in healthcare. Optum's focus on data analytics and tech solutions is a major advantage. Hospitals and doctors rely on Optum's tools to streamline operations, and this segment is growing fast. Regulatory risks. The DOJ investigation and potential changes to Medicare Advantage reimbursements could impact profits. Healthcare is a heavily regulated industry, and policy changes can create uncertainty. Rising costs. Medical costs are climbing, partly due to inflation and new treatments. This could pressure margins, but UnitedHealth's scale helps it negotiate better rates with providers. So, UnitedHealth is well-positioned for long-term growth, but it's not immune to short-term challenges. The question is, are these challenges already priced into the stock, or is there more pain ahead? Before you rush to buy UNH stock, let's talk about the risks. No investment is a sure thing, and UNH has some hurdles to watch out for. DOJ investigation. The Department of Justice is looking into UnitedHealth's Medicare billing practices. If they find wrongdoing, UNH could face fines or stricter regulations, which would hurt profits. CEO transition. The new CEO, Stephen Hemsley, is experienced. He led UNH from 2006 to 2017, but any leadership change can create uncertainty. Will he steer the company in the right direction? Medical cost inflation. Rising healthcare costs could squeeze margins, especially in the Medicare Advantage business, which is a key growth driver. Market sentiment. UNH's stock has been hit hard by negative headlines, and investor confidence is shaky. If sentiment doesn't improve, the stock could stay depressed. Competition. UNH faces competition from other insurers like Humana and Cigna, as well as tech-driven healthcare companies entering the space. These risks are real, but here's the thing. Many analysts believe the 50% stock drop in 2025 is an overreaction. The company's fundamentals, revenue, cash flow, and market dominance are still strong. Plus, insider buying suggests that people close to the company think it's undervalued. Alright, moment of truth. Should you buy, hold, or sell UNH stock? Let's weigh the pros and cons. Pros. UnitedHealth is a market leader with a diversified business model. Low PE and P/S ratios suggest the stock is undervalued. Strong cash flow and a solid dividend yield of 2.91%. Insider and congressional buying signals confidence. Long-term trends like an aging population and healthcare tech favor UNH. Cons. DOJ investigation and regulatory risks could lead to fines or restrictions. Rising medical costs and a weak Medicare Advantage margin are short-term headwinds. Recent stock volatility and negative sentiment could keep the price down. CEO transition adds uncertainty. Here's my take. UNH looks like a buy for long-term investors with a high risk tolerance. The stock's 50% drop seems overdone, given its strong fundamentals and market position. Analysts agree. 27 Wall Street analysts give it an average price target of $357.43, which is about 17.5% upside from today's price. Some even see it hitting $440 in a bullish scenario. However, if you're risk-averse or focused on short-term gains, you might want to wait for more clarity on the DOJ investigation and Q2 earnings, which are coming up on July 29, 2025. So, there you have it, a deep dive into UnitedHealth Group stock. UNH is a healthcare giant with strong fundamentals, but it's facing some short-term challenges. Whether you're a value investor looking for a bargain or a cautious trader waiting for the dust to settle, there's a lot to consider. Anyways, that's all from my side. I'll meet you next time. Until then, bye.